Broadcasting from the 72nd floor of First Canadian Place in the heart of Toronto's financial district, this is #Finance, the podcast that profiles innovative entrepreneurs and thought leaders operating in the public markets. Presented to you by the CSE, the Exchange for Entrepreneurs.
Well, thanks everyone for joining us today for a very special edition of what I'll call today #Finance. This is our podcast that we host at the CSE. This is a special presentation in concert with Cannatech and our friends at Cannatech here in Davos. We don't obviously come to Davos all that regularly. It's been years since we were last year. And myself, I'm James Black. I'm with the Canadian Securities Exchange. I'm joined today by Jason Paltrowitz from OTC Markets, based in New York City. And then Richard Carleton, the CEO of the Canadian Securities Exchange. Thank you, gentlemen, for coming today to our special presentation.
Thank you.
Awesome. Today we're going to talk about the public markets and financing and being public and how it all interrelates to the global cannabis marketplace. And why are we the ones to talk about this? Well, I'll let the two men here introduce themselves in more detail, but suffice to say, without the CSE and the OTC markets, I'm not sure how many businesses over the last years would have been capitalized in the cannabis sector. The public markets have been a huge resource from a capital raising standpoint for many of these cannabis companies and producers. And the reason we came to Davos a year ago was to exchange ideas, but also share the message that a lot of this activity is happening in North America. What we're starting to see is a globalization of not just the industry, but the financing of the industry. So with that as sort of a table setter, what I want to do is let Jason and Richard introduce who they are, what their organizations do, how it intersects with cannabis, and then we'll get into more details about how we see the playing field get drawn as we have, as the things we've discussed today, a global footprint for this industry expanding rapidly. But without further ado, Jason, perhaps you can just tell us a little more about what it is that the OTC Markets does and the role you've been playing in cannabis finance.
Sure, thanks, James. So my name is Jason Paltrowitz. I'm Executive Vice President of Corporate Services for OTC Markets Group. OTC Markets Group is the largest equity market actually in the United States. So we are home to over 10,000 securities across three markets: our premium QX market, our venture stage market, OTC QB. We are the home for most of the largest international companies that want to be traded in the United States. So some people don't realize this, but Roche, Adidas, Heineken are all traded in the US on our market. Unlike our friends at New York and NASDAQ, however, we're not an exchange. We're what's classified as a super ATS. So we are regulated by the SEC, we are a FINRA regulated broker-dealer, we are part of Reg SCI, so we are structurally significant from an equity market standpoint, but we're not an exchange. And what that means, and why I mention that in relation to cannabis, is by being an ATS, we can be extremely innovative and entrepreneurial. And that has allowed us to do things like have public Bitcoin companies trade on our market. So the Grayscale Bitcoin Trust, GBTC, went public on our market. And that has allowed us to be the largest market for publicly traded cannabis companies. So on our QX Best market, we have 71 publicly traded cannabis companies from around the world. On our venture market, we have 146. These are all companies that are looking to access the public markets, to have a public market for their investors, and then to use that public market as a jumping off point after they've gone public, and Richard will talk about that in a bit, to then be able to raise more capital. I think what we've all seen, and there's debate about public markets versus private markets, but WeWork, I think, has shown us all that the public markets are probably the best place for raising money because they're public, they're transparent, and transparency breeds kind of investor confidence, thank you, and true valuation. And so we believe that investors are the best position to decide what a company's worth and what's investable and not. And so being public on an innovative market gives companies that ability.
Quick poll. Who here has owned or bought a cannabis stock? I need a show of hands. Okay, so everyone in this room pretty much. So we're still relevant, I guess.
Yeah, who still owns one?
We made money on it last year, perhaps the last 6 months.
Thank you, James. It is indeed a pleasure to be back in Davos. The year seems to have flown past incredibly fast, and we're obviously moving up in the world, even though we're down a flight of stairs. As Jason said, our shoes aren't sticking to the floor quite as much as they did last year. We were at the bar across the street, basically, for the week. But in any event, the story of the Canadian Securities Exchange and the cannabis industry dates back to the spring of 2014. We saw a number of public companies come into the markets in Canada looking to raise growth capital to become licensed producers under the new Canadian federal government's medical marijuana scheme. And so instead of the government growing medical marijuana, they decided to open it up to the private sector. The government was expecting a small handful of applications, wound up, I think, with 1,800 in the first year. And as a result, were completely and utterly overwhelmed in terms of both processing the applications and given the guidelines have been laid down, they lacked staff to, in fact, go out and inspect the premises that people were looking to build. Notwithstanding that fact, the industry caught significant attention from the retail investment community in particular. And within a relatively short period of time, the Canadian Securities Exchange had 30 or 40 companies by the fall of 2014. I guess the next big thing that happened was a couple of years later, we had a first U.S. company show up from either the state of Washington or Oregon, I can't remember which, but a company that was operating legally within the jurisdiction. It was a vertically integrated seed-to-sale operator. And they came to us and applied to list. And we had to do some work on that one. Because as we know, with cannabis being a Schedule 1 substance in the Controlled Substances Act of the United States, at the federal level, possessing, growing, processing, and other sorts of things with cannabis is illegal. But this is a company that was operating completely legally within the framework that had been established within the state. We ultimately decided that we would, in fact, list the company. We'd accept the represent warranties from the company that they were operating in accordance with applicable law. And little did we know it at the time, that was going to pave the way for a number of very large operators. The household multi-state operator names in the United States are essentially all listed on the Canadian Securities Exchange at this point, with a market capitalization that actually has rebounded significantly within the last 6 weeks or so. The group is up about 22-23% in the last 6 weeks, which of course also speaks to the volatility of the sector. But about half of the losses from 2019 have been already regained in the space. And I think it's fair to say that when people look at the different stocks available, we have roughly 180 names in the cannabis sector generally. And our peers at other exchanges in Canada have roughly 20. But when you look at that group, I think it's fair to say that investors are looking at the U.S. as the best developed, most potentially profitable market for the time being. Again, because of the growth of the number of states and the population in particular that those states represent for adult recreational use. We've also had a significant influx of companies from outside of North America. We've seen our first Asian companies in the last year. The Caribbean Basin, South America, we have listed our first Israeli companies this year. And even, at this point, some European companies that are looking to work within the confines of the medical regime that we're going to see over time, developing at different rates in different jurisdictions. But again, they are looking for sources of capital with their peers in Canada on the Canadian Securities Exchange. I guess looking at the financing trends in general, I think, James, we're over $10 billion raised for the sector from inception. 2018 and 2019 were obviously the best years, about $5 billion in 2018, $3 billion in 2019. The difference was the 2018 raises were largely done by companies as they came into the market. The 2019 fundraising was largely conducted by companies who were already listed and were going back to the market having established a track record as a public company, relying on the achievements that they made against plan, and they were able to successfully raise capital. And the other difference is that instead of raising straight equity, they were looking to have debt instruments or convertible type securities that carried a coupon, again, to distinguish themselves and to increase the, the desirability of those securities amongst the investor population. We still have a strong pipeline of companies in the cannabis space, the Canadian Securities Exchange. This story is far, and I mean far, from played out at this point. And obviously, given the continued uncertainty in the United States over hemp, and the lack of progress on liberalizing the financial rules for access to banking and insurance services for the companies in the United States, it's clear that at least through the current election cycle, I think we're going to continue to be living in this state of relative uncertainty for the U.S. operators.
Good point. Good table setting. So I'm going to go back in time here, because many of you in this room were here, or across the room at the Sticky Bar, and we were talking about, we were experiencing a high in the market, so to speak. Things were pretty exciting about a year ago. And then there's a bit of a shakeout. Let's call it a shakeout, particularly over the last 6 months. And yes, there's been some correction, but it's still a pretty ugly 6 months. Let's maybe just reflect, Richard and Jason, what you guys think has contributed to the market coming back to earth a little bit, and why we can learn from that, and why we're just in the second or third inning of this game and not, Richard says maybe the first.
Pre-game warm-up.
Pre-game warm-up, yeah. Why it was necessary, but really what contributed to it, and what did we learn?
So I'd like to say, what did we learn? But we say that every time markets correct, that we should learn something, and then we're surprised when we go through the same kind of cycle with a new industry, right? So, I think this time last year, we were even talking a little bit about internet bubbles or biotech bubbles, right? It's just always too good to be true. But in any kind of new market, in any side of new public market, new industry, there's that irrational exuberance, right? There's a rush to fund. Maybe there's a lack of understanding as to what you're funding, or maybe lack of business plans, or maybe lack of see-throughing on those business plans. And so money flows in to these new industries, and everybody gets really excited, and the valuations rise, and more money gets raised. And then it corrects itself. This is not anything that we have not seen before in the history of public equity or public markets. I think what we've seen is kind of the stuff that we were talking about last year when asked, right? You saw a consolidation, you saw the good businesses, the good public companies execute on business plans, return to their investors, build good public companies, which is important, and one of the things we'll talk about, how to build a good public company. And they were rewarded for that. And so I think what you're seeing now, and Richard will talk a little bit about some of the things he's been talking about decoupling the U.S. multi-state operators from the others. So we've seen some of that as well. But I think generally speaking, you're just seeing that natural shakeout. There's been some M&A. You're seeing the cream rise to the top, the players that have a business plan, that have thought about it, that are executing on it. Again, the public markets and that transparency helps, and you're seeing those companies kind of get into the next phase of being a public company. Those that can't compete, those that weren't able to execute on their business plans, those that spent their money wildly. There was that time there when everybody thought they were just going to get funding, and that money was being thrown around for cars and videos and all sorts of things, and not really running a business. Those guys are gone. And so, it's pets.com all over again, just in a different industry.
I don't know that they're all gone, but
yeah.
Some of them are gone.
They're shaking out.
Some of them will go.
Yeah.
There's no doubt about it. And certainly when we look across the number of companies that did list, especially the ones from Canada in 14 and 15, there are a lot of companies that said they were going to be licensed producers in Canada now almost 6 years ago, and they haven't made it. Well, of course, do these guys actually have any intention ever of pursuing the license? No, probably not. They were leasing Lamborghinis and entertaining each other at Fern bars in downtown Vancouver, Calgary, Montreal, and Toronto. But again, as I say, more of those folks are out of the industry, and we do have, in many cases, several quarters of reports and execution against plan. And there are a lot of reasons, as we know, to be bullish still. And I kind of joke because any kind of North American panel discussion has to have sports analogies. And we talk about, well, where we are in this game, is it the first inning? I think we're still warming up. I'm not sure that we're quite all the way there yet.
One hell of a warm-up, Richard.
Yeah, but when you've got an industry that still has so few clear rules, and of course the hemp presentation was particularly apt for that. The rules are extremely unclear.
It's still a street fight.
Absolutely, and it's obviously has a negative impact on an industry for a whole bunch of reasons. Should be significantly more important at this point than it is. But again, when we look forward to where this industry is going to be, think about it. It's only retail investors, basically, at this point, and some hedge funds and some private equity folks. But none of the big institutions are involved here at all. I think there are two companies in Canada that are in the composite index, Aurora and Canopy. Although I think actually Aurora came out on the last rebalance, so there's just one. Which means that there's, and even there, some of the investors who are shadowing the index refuse to put cannabis issuers in. So we've got big swaths of the biggest money in the market that aren't actually participating in these names. Well, think what happens. I mean, Saul talks about reducing the stigma. Well, when the stigma is reduced to the point where the largest pension funds in the world start investing in these names, what do you think that's going to do to the valuations for the companies that have executed well against plan? Right? It's nothing but positive. In the United States, of course, cannabis issuers or companies cannot deduct their business expenses against federal corporate taxes. So if, as and when that changes, that money goes straight to the bottom line. Again, another reason to be bullish on those particular companies in the sector. And as we know, there are so many jurisdictions in North America where you have a legal use campaign, where it's the government who's selling the product. And here's something, I mean, you'd never believe this, but the government is the worst weed dealer you could ever possibly imagine. Oh, I know, let's wait for it, but perfect example. We're going to talk about Cannabis 2.0 in Canada. So we only had dried flower for sale for the first year and 2 months of legalization for recreational use in Canada. That's it, dried flower. Most of them, the quality was poor, the price was high, and most of the jurisdictions ran out of product before the end of the week, kind of thing. And they had deliveries once a week, because of course it was a government sort of thing as opposed to a just-in-time delivery logistical situation. So now we come up on edibles. Great, the industry says, fantastic. Finally, we have an opportunity to provide a broader range of products that are currently being served by the black market. What happened in Ontario, the most populous province in Canada? They ran out in 2 hours. They had a whole frickin' year to plan for this, and they ran out in 2 hours. So if you're a Canadian producer, and thank goodness I had the Boris's CBD thing, otherwise I'd be way more upset and sort of calm and focused as I currently am. But when the Canadian producers are in the market trying to tell their story to investors as to why they merit investment versus some of the other opportunities that present themselves on the Canadian Securities Exchange, they've got that enormous ball and chain around their legs, in that the government is retailing most of the products in the country, and as I say, shockingly enough, they've done a really crappy job of it.
Yeah, Canada's done a nice job in the cannabis sector basically debunking the myth of first mover advantage. Whereas all the time people would say that is an advantage. And I think for the global audience that we have here today, you probably learned a lot of stuff and kind of just take your notes and go, okay, I can raise money there, and then I can outperform on many other metrics that they're not doing because they overgrew, they overpromised on delivery supply, and they completely botched retail. And I don't know how we recover from it other than continuing to be a banking center for the industry, and maybe having some of the leadership companies like Canopy, which are probably, I don't want to say too big to fail in the sector because that's not such a thing, but they're pretty entrenched now. But maybe Jason, because you guys have a large Rolodex of international clients, and maybe you guys can both comment on this for the group here, is what is the world bringing to the table that our North American guys can't? What are you seeing from the Israeli companies, the Swiss companies, those that, investors that may have thought that, man, I lost too many dollars on MSOs, too many dollars on Canadian growth stories. Are you guys seeing anything from the international community that's unique that has probably learned from what we've experienced over the last couple of years?
I think the one thing we've seen in the U.S. is that when you say cannabis investing, there's just this natural tendency to think it's recreational. If I talk to institutional investors, if I talk to friends, if I talk to family, if I talk to my dad and say we're coming to Davos to talk about cannabis, everybody naturally gravitates towards a bunch of stoners or retail cannabis investing or that type of scenario. I think what we're starting to see more of and what the world is bringing in, and certainly Saul and Phil and everybody, is that there's recreational cannabis and then there's medical cannabis. And those are two very different things. They're very different things, obviously, in terms of what they do. They're very different things in terms of an investment thesis and what I want to invest in. And I think that's being decoupled a little bit in the US. And so I think the international companies that are coming in and going public on our market or on Richard's market are not cannabis companies. They're biotech or pharma companies that happen to be using cannabis. And I think that's very, very different than the retail, the edible suppliers, or the recreational use industry. And so I think that's what we're seeing. That's actually helping to legitimize it even more. And I think that's what's getting government to be thinking about it a little bit differently. But there's still in the US that natural tendency when you say cannabis, to think about it's illegal drugs and people going to jail and stop and frisk and all that kind of stuff that gets into the natural mindset. And then again, that's what the international companies are changing about cannabis in the U.S.
Yeah, I think it's absolutely right that when we see companies come in from offshore, generally speaking, they tend to be very heavy on intellectual property, branding, and as Jason mentioned, much more less likely to be a recreational story than something that's focused on some aspect of the medical space or extraction technology or something that's unique and a value proposition that goes well beyond, obviously, cultivation of cannabis. I may have said that last year at this time that I'm unaware of any industry where the farmers capture the majority of the value chain. And there's no reason that this industry is going to be any different. It's the people that add value through the application of technology and intellectual property and innovation who will, of course, capture the largest percentage of the value chain, for sure. And we're certainly seeing that as, again, in terms of the valuations. By and large, for example, the extractors have not been caught in this the downdraft that you saw from the stock prices, at least the ones that were able to distinguish themselves from the rest of the crowd. And again, I think that's something that we'll see a greater focus on as time goes on, as opposed to, I'm Richard and I have a 250,000 square foot grow off outside of Edmonton.
You do?
Yeah, no, actually, we've got a 16,000 foot operation on the 72nd floor of downtown Toronto, but it doesn't grow weed.
No, just helping get finance. Okay, so here's sort of a blue sky question, because I think it's, again, I'm trying to tie everything back to why the hell are we in Davos, Switzerland, to talk about cannabis? And we're not, believe it or not, if you're listening to this, we're not on the main stage at the WEF. We're not the World Economic Forum. We're in the basement level of a very nice, but a basement level of a promenade retail outlet. And I think if we had the main stage and the world's elite, not that we don't have the world's elite here, but the world's elite, and the presidents and these people are billionaires, all these important people, all these really important people.
Yeah, I think aside from Saul, nobody got here on the G750, right?
Raise your hand, you did, because I want to go for a ride. I just want to kind of hone in on what would you say if you had 10 minutes to this international delegation about the industry that we've been on the front line of? What would you want to say to them that they need to, in their portfolio of mandates, really pay attention to as a world leader or a billionaire or someone who's trying to enact change? Because I guess one of my frustrations as someone who's in the industry is that everyone's attacking it from so many different angles. And one of the things that we're in danger of experiencing is a lack of momentum or things being tied up because no one really knows how to attack the problem. Sort of like in the States where I'm seeing we've got everything happening on a different state level. We just experienced this in Canada through our provincial system that we couldn't deploy an in-demand product across 10 provinces because we didn't have our UOS better. So if you can go and try to put a 10-minute, 5-minute, 30-second elevator pitch for the industry for those that can really change things at the highest level, what would you say at the left?
Well, the first thing is that the black market in cannabis is providing billions of dollars to bad guys. And there are different sorts of bad guys in different parts of the world, but it fuels enormous amounts of organized crime.
Right.
And that one of the greatest things that a country can do in order to reduce the flow of funds to organized crime is to legitimize the cannabis industry, to regularize it, to destigmatize it, to include it as part of whether it's recreational, medical, wellness, nutraceutical, whatever the angle you choose to take. But again, there are billions and billions and billions of dollars that are being diverted to antisocial actors in every country in the world. And if they want to attack that, legitimizing cannabis in a variety of forms is one of the best ways to go at it.
So Jason, when you get your meeting with Donald Trump, or President Donald Trump, what do you have to say to him for it to be a frontline issue as far as...
Can I have a selfie?
I think I'd be a little controversial. Post-Cold War view of the world was that globalization was going to lift all boats and, we were going to export consumerism and the consumerism would make everybody happy and the world would all be better. As we sit in Davos now, maybe that wasn't the case. The gap between rich and poor is the worst it's ever been. We're polluting more than ever. We're using so much. I mean, the United States, the garbage that we create in the United States, it's crazy. There's another virus coming out of China, I just read. Right, so are we happier as a society post-Cold War? And there are all these things we're trying to solve for, and there are all these entrenched interests that are fighting off solving those problems, whether it's the fuel industry or the cotton industry for hemp. And I think what I would challenge world leaders to do is maybe think a little bit differently about everything. And that comes with cannabis. Cannabis kind of touches a lot of these things, whether it's hemp for fuel or for farming and agriculture, for waste reducing. I was talking to somebody out front about the first car that was made with hemp. And what hemp can actually be used for, what it does to reduce carbon footprint, what it does to solve some of the problems we're facing from a healthcare perspective. And if you come to Davos and you stop thinking about post-Cold War globalization as the way things have to go, and stop talking about making tweaks on the fringes to make the world a better place, and start really thinking about some of the things you can do to be a little thinking outside the box, I guess. That's what I would challenge. There are a lot of the world's problems. I'm not saying hemp or cannabis is the be-all and end-all, but it does start with kind of changing the view of the world and how you look at things.
So are we on that path in the U.S.? And I don't want to make this too U.S.-centric, but you are a big, important country. And, people are kind of waiting, from my perspective, or waiting for you guys to tip your hand. Phil, you said that in your own presentation. What is the U.S. going to do? Because it's going to inform, or at least provide comfort for a global myriad of companies to start moving the needle forward on pro-legalization.
I don't know the answer. Again, there are too many entrenched interests in the U.S. to really think there's going to be
because a year ago everyone was
astronomical change.
We're here next year. And
yeah,
this
look, and again, I think you have to decouple recreational from pharmaceutical again. Yep. Recreational, I think that will continue to march along. There'll be more states that legalize it this year, and there'll be a couple more next year, and that will continue down a path. From the pharmaceutical perspective, I guess the one place where having big money in government and politics helps is that I think you're starting to see some of the pharmaceutical companies want to get in on this. They do not want to miss the boat, and I think you will see, but it will be slow until our leaders really change the way they view things. I don't think you'll see one big stroke of the pen, everything's going to change moment, but I think you will see it incrementally.
I'm curious to think that, again, we'll go back a year, but what's the exit path for a lot of these companies? Is it a takeout by a big pharma, by a tobacco company? I think we've debunked a few of those in the last year, those concepts that you're going to have canopies and they'll continue to grow and be big. You have others that'll get eaten up by other competitors in the industry, and then things like big tobacco, from whom I've spoken to at Philip Morris International, they're no interest. And then the international conglomerates, the pharma companies, maybe, but from a medical level. Richard, any other insights as to the company's growth prospects as far as, are we just going to see more IPOs and more companies coming to market, or are we going to just see more internal growth through acquisition?
Well, I think just quickly to echo the comments on pharma. I mean, remember, it is very slow, and big pharma, in doing any sort of acquisitions in the junior space, really are looking for successful completion of preclinical trials, or actually into phase 1 of the FDA trials, and we're not there yet. There's obviously some strong research which has come out of Israel, which is going to provide some guidance to companies that get there, but we are a ways away from seeing those sorts of strategic acquisitions being made by big pharma. And of course, again, that's another one. It also depends on what the addressable market looks like for the particular products and so on. So there's no guarantee in that direction. So I think what we're going to see is a continuation of investor focus and new companies that are getting funded that have brands and strong intellectual property or some unique take on extraction or whatever. I mean, speaking to those folks, and in fact, if we were at the MJ Biz in Las Vegas in mid-December, you would have thought you were actually going to an extraction trade show. So it was hundreds of thousands of square feet. There were 35,000 people that were attending this thing. It was gigantic. And there must have been, I think, 70 companies that were marketing extraction equipment. And the vast majority of those had the extraction equipment right there on the floor. And in fact, some of them were actually operating, which was kind of awesome because they were actually dumping the flour into the machine. The oil was oozing out and all of that stuff.
It looks disgusting, by the way.
Yeah, it wasn't pretty. But in any event, so that's obviously going to be continue to be a big area. I think one of the interesting things is, again, on the retail side, because, again, we let's say for the sake of argument, we hit the promised land. So the stigma's gone, the U.S. deschedules from Schedule 1. And from an adult use perspective, whether it's a wellness nutraceutical or the, my favorite euphemism, the mind release market, the stoners. Doesn't Amazon, Costco, Walmart jump in with both feet at that point?
They might, yeah. I mean, geez, they like to deliver all sorts of things, do they not?
Yeah, so I'm kind of wondering about the folks. They might it's a case of be careful what you wish for, because that might in fact open giant new competitors coming into the market. And they tend to come at it with, they may do some acquisitions, but by and large they just move in with their superior branding, logistics, and so on, and crush the competition, I believe is the basic business plan of Amazon and some others. So as I say, people need to be, I think, careful what they wish for on that one, because I think it does open up whole new categories of potential competitors in the retail space.
Yeah, and again, just because you grow the industry and your first mover advantages can dissipate rather quickly when other people can make money out of your value chain. So don't kid yourself on that front. You always have to be competitive. I have a few more questions, and then maybe we'll open up for some audience-based stuff. But we were going to touch on the topic of being public and all that. I don't want to go into too many details, but here's a broad question. Is it, for the next year or 2 years, still going to make a lot of sense for these companies to access public funding? Is it still going to be the lowest cost of capital for a lot of cannabis or cannabis-derived companies to access that pool of capital?
Well, I think there's no doubt that there were a lot of U.S. companies that delayed or deferred going public during 2019 because of the valuations that they were being quoted by the investment bankers. And whereas when they began to do the work earlier in the year or late 2018, they saw certain numbers, certain multiples being offered up. when they looked at those multiples coming down as a result of the overall sell-off in the marketplace, those plans were put on the shelf. That said, and at the same time, we saw a lot of private money step into the gap to try to provide real estate finance, trade finance, inventory finance. It's not cheap. The covenants that are required for that kind of debt capital are extreme. But a number of companies did in fact opt to do financings in order to stay private, to be able to grow the company a little further. Now that we've seen a recovery in valuations, at least half of the loss has probably been, as I say, has been won back in the last few weeks. That we may see those companies come back into the market. But again, the valuations that you saw 3-4 years ago, some of the Canadian LPs, that's height of .com or any kind of tulip mania or South Seas bubble type stuff. We're not going to see that again in the industry, and that people are significantly more disciplined.
Yeah, Jay, I want you to extrapolate on that, but I also want you, because again, we have an international audience listening and watching. Why is the tandem of our marketplaces, and why is North America still going to continue? This is kind of a skewed question, but why is North America still going to be the best place for a cannabis company to come raise public capital? Why won't they just go to London or somewhere else if they're going to start trying to be competitive? Why North America? Why Canada, US?
Well, I guess we should start with, in case we didn't mention it, the CSE and the OTC has a strategic alliance. So we do this together. If you couldn't tell, from my first statement, one of the things that makes it difficult from an OTC markets perspective is we're not a traditional IPO market. So when you're looking to go public, Canada versus any market in the U.S. is still much more preferred. It's cheaper. It's easier. The money you save just on your D&O insurance is astronomical. That being said, what companies from around the world are doing is going public in Canada and then cross-listing with a QX or QB listing in the US. That is innovative, to my first comment about ATSs can be innovative, and it's very powerful. And so we continue to see that around the world. Companies from Israel, we've done, Australia, going into Asia.
So waiting for our first Swiss company.
And so why do companies do that? Why don't they go public on the ASX or the TASE or SGX in Singapore? The simple reality is that North America is where the money is. If you look at who's investing or the type of investor into cannabis, it's not your large institutional investor. You're not seeing Fidelity throw money in at this. What you're seeing is a family office and the large retail investor. And the United States and North America combined still has well over 50, close to 60% of the world's high net worth population. And it's the high net worth population as well as, or coupled with, a retail investment philosophy. You still see that retail money, the investor who puts all of their money into their 401k, their pension, and their retirement, but they still got what we call funny money, which is where they do stock picking and do investing. And it's that same mentality, which is why biotech companies love coming to the US, because there's that appetite from a retail perspective to invest in biotech. And it's the same thing with cannabis or any new market. You will find, or mining and minerals for that matter. Why do gold and silver companies love coming to the US? Because you've got gold bugs, retail investors that will put money on that gamble, if you will. And so I think North America provides a market that's efficient for raising capital and gives you access to the widest possible investor base for your secondary market or for your post-IPO trading environment.
Good stuff.
Nothing to add?
Yeah, nothing to add.
Well, I was going to say the other thing, though, and I guess this is one of the challenges that we're looking to address in the coming year and beyond, is, as Jason mentioned, we have a great working relationship between Canada and the United States to bring together those two pools of liquidity so that once the company is listed in Canada and trading in the United States over the counter, the market makers are active on both of our respective books. There's cross-border arbitrage that ensures that the quote is fine. You have guys that are arbing the currency difference between the US dollar quote in the United States, Canadian dollar quote to Canada. So what you see is a very tight market, and therefore it's very efficient for retail investors or whatever investors in the US, and also efficient for investors in Canada. And we know that there is a positive overall liquidity benefit for the issuer in that. It's much more effective than being listed in a single market. So when we look at the companies from beyond North America, Switzerland, Asia, other places, we need to have similar sorts of relationships with the home market so that you can you can talk to your friends and neighbors and so on, and they can go online on their discount brokerage account and for inexpensively trade the stock. They can buy the stock. They can the market for that will be very efficient because people are ensuring that wherever you're listed that again is a tight pricing mechanism across all of those different venues, even if there's relatively limited overlap between the trading hours on the two markets. So again, that's one of our challenges, is looking to build bridges, make relationships with markets and the local time zones. So we do work with the Frankfurt Stock Exchange, and many of our issuers are listed and quoted in Frankfurt. We have some relationships in the UK that we're looking to build. Again, to provide companies from the UK who may not be able to list on the conventional markets in the UK, but can list on us, but also provide liquidity in pound sterling in the local market. So increasingly, those are the sorts of relationships we're going to be looking to provide just a better overall listing experience for the companies.
I just want to thank Cannatech, Vincent, Joshua, and Debbie, and without them, this wouldn't have happened for a second year. Hopefully, we're back next year and still talking about these important issues. I just want to thank everyone's attention. I know we're just coming off lunch and a travel day, so it's kind of hard to focus. But again, we've recorded this for your benefit. #Finance is what we'll be posting, as well as Cannatech site. So again, thank you so much. Look forward to chatting with everyone, and I'm really looking forward to Boris. Who's going to tell us more about the European market and the Swiss market. And once again, have a great conference. Enjoy. Thank you.